Hello, everybody. Welcome to Monday. The S&P 500 was up a little bit more than 3.25% today. A really big time green shirt day, and actually, a big day altogether just because of what happened over the weekend. And so, obviously, they moved the tariffs down from 145% on our side and 125% on their side, down to 30% on our side and 10% on their side. So that was a big number. It's a big jump down. It's shows willingness on both sides to move. Obviously, there was enough fear on both sides to keep things moving forward, which I thought was, really good in this particular case. So we did make a move today to move some of the money back into the portfolio. We've been at 22%, which is just basically what's left over after we sell everything else that has high appreciation or what have you. And so we'll be back at around 35% for our exposure and kind of eke back in. There are quite a few other things that happened today that were important too. We also, broke above the high that happened just before the Liberation Day. And so that's, again, kind of showing some of that reversal trend. We cracked through the 200-day moving average. The 200-day moving average is actually moving up. So, from a pure market standpoint and what the market's trying to tell us, we also heard some, news about the tax cut package that they're working on. And, so those are things that can kind of propel this market going forward if, they are able to keep that momentum going. The tariffs are still, anywhere from 10 to 30%. There's a few carve outs here and there. But not that many, especially below 10%. And, the tariffs that happened in the Great Depression, the Smoot-Hawley tariffs were 20%, but it was only on 25% of goods. This is on basically everything. However, back in the 30s, we were much more so a goods, economy, and now we're much more of a service economy. And so this is, still, hopefully there's enough power in that service economy to kind of overcome this hiccup that we're going to have because of this, lack of goods and such. I don't believe the stock market is going to care, unless they go back into high tariffs or we continue, because we do have, 90-day pause on this China thing at this level. So it could come back around again. Of course, we have the other 90-day pause in all the other countries. And so hopefully, we've seen enough of how this works that they, don't, get back into these higher tariffs again. But how do the tariffs that we have now work? That's going to be something we have to determine who ends up with most of those costs. How does the stock market look at that? But the interruptions that we're going to have, if they stay kind of the way they are now, I don't think the market's going to care that much. I think the bigger impact might be just the uncertainty that happened. So you had, all of these companies kind of frozen as to what to do, whether they had goods or services, it didn't matter. Lots of consumers are worrying about what to do, just because there might be a recession or what have you. And so sometimes, you get too many people worrying about a recession and they stop to spending and all of a sudden you have a recession. So, we have yet to see that. Those numbers are still out there. We've seen the soft data, as the Federal Reserve talked about, in terms of, consumer confidence surveys and what have you. But again, those aren't nearly as good as the hard data, like what are actual retail sales. And everything's been really good because everybody was buying so much stuff, trying to get ready for these tariffs. But let's see what happens, in this gap and how much that might have as an impact and how the market reacts to that. So we bought some broad-based pieces today and basically just tried to, get some money going back into the market and hopefully things continue to go up here, get a nice rally as far as that goes would be great. The next real stop would be the all-time high. That's a little ways away, but still possible. So anyway, look forward to seeing you again tomorrow and we'll talk to you then. Thank you.